The price of Bitcoin is on the rise again, with some people believing that this cryptocurrency is the new digital gold. And now BlackRock's CEO has pitched in with his thoughts about the real impact of Bitcoin on the US dollar. But is this sometimes shady asset class really a viable future as an international reserve currency? Or are we in the midst of another bubble reminiscent of Dutch Tulip Mania? Hi everyone, I'm Martin Bamford, a chartered financial planner at Informed Choice, and in this video I'm taking a look at some comments made by BlackRock's CEO about the real impact of Bitcoin on the US dollar. Larry Fink's comments come at a time when Bitcoin is once again surging in price up towards its all-time high, and it's an interesting set of comments that I want to unpick in this video. But first of all, please make sure you press that subscribe button. I make videos here about personal finance, investing and happiness, and I'd love to have you on board as I share more videos like this. Bitcoin then, so the price has been surging in recent weeks, driven higher, we think, by a variety of factors, including a renewed interest from institutional investors and also more consumer applications, for example PayPal in the US allowing its customers to use Bitcoin as a payment option. And now we have comments from Larry Fink, CEO of BlackRock in the US, talking about what he thinks is the real impact of Bitcoin on the US dollar as a global reserve currency. Fink says that having a digital currency has real impact for the US dollar. He says that digital currencies like Bitcoin are making the US dollar less relevant, saying, I'm not talking about for Americans, I'm talking about for international holders of dollar-based assets. And he asked, does digital currency change the need for the dollar as a reserve currency if there was a true digital currency that was separated from dollar-based assets? Fink commented on Bitcoin at a Council of Foreign Relations meeting where he was also on a panel with the former Bank of England Governor Mark Carney. He asked whether Bitcoin can evolve into a global market. He warned that Bitcoin remains pretty much untested and also a pretty small market compared to other currencies, saying you see these giant moves every day, it's a thin market. So let's unpick some of the comments from Larry Fink and look at what he meant by some of those comments about Bitcoin's real impact on the US dollar. And we have to have a bit of a history lesson first. We have to look at why the US dollar became a global reserve currency, what that means. And this dates back to 1944, something called the Bretton Woods Agreement. So leaders of many allied countries got together in Bretton Woods in New Hampshire in the US to talk about the stability of international currency markets. This was right at the end or towards the end of the Second World War, and they reached an agreement that rather than pinning global currency exchange rates to gold, they should link exchange rates to the US dollar, which was in itself linked to gold. So that was called the Bretton Woods Agreement, and this is what all of this discussion today about Bitcoin being an alternative effectively to US dollar as a global reserve currency, that's what it all stems back to. So at Bretton Woods, these 44 allied countries agreed that they would link their currencies, their domestic currencies, to the US dollar as its reserve currency, and the US authorities agreed that they would redeem US dollars for gold on demand. So these allied countries, they start buying up US dollars as a store of wealth, but of course buying and holding dollars themselves, paper currency, becomes quite cumbersome. So instead they start buying up US Treasury securities, which are linked to dollars, which are linked to gold. It gets a bit confusing in terms of the linkages back to the underlying asset gold. And they were happily buying up Treasury stock, and then the Vietnam War happens and the US starts printing money and spending lots of money on its domestic programs, and these countries rightly get nervous and they start redeeming the money. They start redeeming their US Treasury bills, they start redeeming their US dollars, and they start asking for the physical gold. And when this happens, President Richard Nixon unlinks the US dollar from gold, because the US does not have sufficient gold reserves to back up all of these dollars they have been printing. And as a result of Nixon's decision, we have free floating currency exchange rates, which we see around the world today. As things stand then, around 60% of non-US central bank reserves are denominated in US dollars, and US dollars are also the denomination for around 40% of global debt. Now, clearly the world is changing. It's been changing for many years, and this year, 2020, with the COVID-19 pandemic, has accelerated that change. It's acted as a catalyst to many existing changes, so things are changing even more quickly this year than they have been historically. And as recently as October, we saw some comments from the International Monetary Fund's managing director in Washington, D.C. This is Kristalina Georgieva, who said that we should have a new Bretton Woods moment. And this fueled lots of conspiracy theorists who are worried about what they call the Great Reset, a great reset of the global financial system. It paved the way for even more speculation that we are likely to see in the future central bank digital currencies. And this is all part of an apparent global overhaul of the financial system. We already have seen many central banks around the world experiment with digital currency pilot programs, started in fact here in England by the Bank of England, but also we've had examples in China and in Canada too. Even Russia has raised the prospect back in 2017 of a crypto ruble. So this is something that has been happening for a while in terms of testing and pilot programs. But to be clear, these central bank digital assets, digital cryptocurrencies, are not Bitcoin. They are based on blockchain technology like Bitcoin is, but they are a digital token representation of the fiat money within those central banks. So this is not about creating a new store of wealth, but just a digital representation of that existing money. So these changes in the global financial system, assuming they are really happening, these do not necessarily benefit Bitcoin. So what does seem to be driving the price of Bitcoin up at the moment is not this conspiracy theory about a great reset or a shift in strategy for central banks, but instead this growing demand from institutional investors. And this one really worries me. And it worries me because we're seeing the emergence of a secondary market in Bitcoin. So institutional investors not trading Bitcoin itself, but instead trading futures. And you only have to think back to the onset of the global financial crisis to understand the damaging impact of the emergence of a secondary market and maybe even a tertiary market in a particular asset, how that can inflate prices, how that can lead to a fairly significant collapse when things start to go wrong. And I woke up this morning to an email from a Swiss-based exchange-traded products provider announcing the launch of their new fee-free Bitcoin exchange-traded product. This is listed on the Nordic Growth Market stock exchange in Stockholm, and even they admit in their press release that it is fiendishly difficult to develop an exchange-traded product based on Bitcoin as the underlying asset. But these sorts of products are here, and more will no doubt be coming, and it's likely this will all be helping to inflate the Bitcoin bubble. Now, I cannot see the future. I don't have a crystal ball. Nobody can see the future reliably, so I don't know what's going to happen next. But when I look at Bitcoin, I see all of the characteristics, all of the hallmarks of a bubble. And earlier this week, I got up early for a breakfast webinar from a UK fund manager who talked about bubbles, and they looked back through history at some examples of bubbles, and they shared some of the characteristics of a bubble. And as I say, I see all of these characteristics right now in Bitcoin. So for example, there are feedback loops. That's a characteristic of a bubble. It's becoming the new paradigm. It's becoming dinner table conversation and the subject of a lot of media reporting. And there are often examples within bubbles of crooks and fraudsters and prison sentences. And sadly, we do see that in the world of cryptocurrencies too. So all of these characteristics make Bitcoin look like a bubble, and that bubble could well burst at some point. We don't, and the fund manager earlier this week made the point that the only reliable characteristic of a bubble, of course, is with hindsight, once the bubble actually bursts. So we can look at some of these factors which make Bitcoin look like a bubble right now, but we won't know for sure if it is a bubble or not until that bubble bursts. Who knows? The Winklevoss twins, they could be right. They've predicted that Bitcoin could reach $500,000 by the end of the decade. The trouble is when you make predictions like that, and anyone can make a prediction like that, it takes a very long time for you to be proven wrong or right. And as Larry Fink says in his commentary this week, Bitcoin is a pretty small currency market, certainly relative to other established fiat currency markets. So any movement in price is amplified. We see a huge amount of volatility in that market. The Winklevoss twins could be right. Bitcoin could become the new gold. We don't know, and we won't know until we have that benefit of hindsight. Now, what do you make of these comments from Larry Fink? What do you make of the current price movements in Bitcoin? Will it become the new international reserve currency, or is it a bubble ready to burst? Let me know in the comments down below. Thank you so much for watching this video. Please do press like and subscribe. Leave me some comments as well. Until next time, I'm Martin Bamford, and when it comes to your money, the more you know, the faster it can grow.